Hey everyone, Donnie Icenhour here. And in this bonus video, we're going to work through a complete closing disclosure word problem. I encourage you to download the worksheet and follow along with this video. Also, there will be additional worksheets for you to practice and work through on your own. Now, I know this problem looks intimidating because it gives us a lot of numbers, but here's the secret. Don't try to solve everything all at one time. We're going to separate the information into four categories: the buyer loan expense, the buyer prepaid escrow expense, seller expenses, and then final cash to close calculations. Now, the instructions tell us to use a 365-day year. Pay attention to that. Round the number, round the final answer to the nearest whole dollar, and make the seller responsible for the day of closing. This is important information to remember. So grab your calculator and let's work through it step by step. The word problem. Before we begin solving, let's read the complete word problem and identify exactly what the question is asking us to do. So, based on the fact situation presented below, complete pages 1 and 2 of the closing disclosure statement form and provided to you from the exercise and answer questions 1 through 4. Okay? Indicate your answers to the questions rounding to the nearest whole dollar. For prorated entries, use the 365-day year method, and for prorated entries involving the seller, consider the seller response for the day of closing. Facts. Seller home was listed and sold by a real estate company. The standard NCAR and NCBA offer to purchase and contract was used, and so pertinent facts about the transaction include the following. Courier fee to pay off seller's mortgage, $20. Home warranty paid by the seller, $480. Wood destroying insect report, $230. Survey, $450. Excise tax. Calculate using the North Carolina statutory rate. Recording fees, $20 for the deed and $47 for the buyer's deed of trust. Deed preparation, $125. Owner's title insurance, $78. Lender title insurance, $468. Settlement or closing fee, $480. Property tax, $2,860 for the current year, to be paid later by the buyer. Seller mortgage payoff, $212 and $212,300. Seller brokerage commission, 7% of the sales price. Escrow reserve, 2 months of homeowner's insurance, 2 months of PMI at $65 per month, and 2 months of property tax based on annual estimate taxes of $2,860. Homeowner's insurance, $655 premium due at closing. Private mortgage insurance, $840 first year premium due at closing. Interim interest is due on the buyer's new loan through April the 30th. Buyer paid before closing costs, $450 appraisal fee, and a $35 credit report fee. Discount points, the buyer agreed to pay 2 points. Loan origination fee, 1% of the loan amount. Financing, it's a conventional 30-year loan of $256,860 at a fixed rate of 4.75%. Due diligence fee, $500. Earnest money deposit, $3,800. Contract sales price, $285,400. And the settlement date, April the 18th. Now, instructions. Complete the closing disclosure calculations using the 365-day year for prorations. Charge the seller the day of closing and round the final answer to the nearest whole dollar. So as you listen to the problem, do not start calculating everything yet. First, sort out numbers into one of 4 groups: buyer loan, buyer prepaids and reserves, seller expenses, and credits and prorations. So part 1, we're going to pull out the important facts. So let's begin with basic information. The settlement date is April the 18th. The sales price is $285,400. Earnest money deposit is $3,800. Due diligence fee is $500. Conventional loan amount $256,860. The fixed interest rate is 4.75%. The loan origination fee is 1%. Discount points 2, and then interim interest April 18th through April 30th. The problem also gives us insurance, escrow, commission, mortgage payoff, taxes, miscellaneous closing expenses, and so our job is to calculate each amount and determine who pays it. So now part 2, calculate the loan origination fee. The loan origination fee is 1% of the loan amount. So the loan amount times the origination percentage equals the loan origination fee. Now we got to remember, it's based upon the loan amount, not the contract price. So the loan amount is $256,860 times 1%. That gives us $2,568.60. We're going to round that up to $2,569. This is a buyer expense because it is a fee associated with obtaining the buyer's loan. Next, part 3, we're going to calculate the discount points. The buyer agreed to pay 2 discount points. Remember, 1 discount point equals 1% of the loan amount. Therefore, 2 points equals 2%. So the loan amount is $256,860 times 2%. That gives us $5,137.20. We're going to round up, $5,137. So a common exam mistake is calculating discount points from the sales price. Both the origination fee and the discount points are based on the loan amount, not the sales price. So now, part 4, let's calculate the interim interest. The buyer owes interim interest on the new mortgage through April 30th. Because interest begins on April 18th, we are including April 18th through April 30th, which gives us 13 days. So now what we're going to do is step 1, $256,860 times the interest rate of 4.75. That gives us an annual interest rate of $12,200.85. Now, since that is the annual interest rate, we need to break that down per day. So what we're going to do now is take that $12,200.85. We didn't round up yet. We're going to divide that by a 365-day year. They give us that information. And so that is $33.43 per day. Now, we're going to take the remaining days of the month. We're going to take that $33.43 times 13 days left in April of when the buyer will own that house. That gives us $434.55. We're going to round up or round. That's going to give us $435. So we round it up, and that's $435. So be careful when counting the days. Since the interest begins on April 18th, April 18th is included in the count. So part 5, items paid before closing. The buyer already paid 2 expenses outside of closing. That is the appraisal fee of $450. Also, the credit report fee of $35. We're going to add those together. $485 paid before closing. These amounts appear in the buyer paid before closing column. Do not, I repeat, do not add them again to the buyer's cash needed to close? The answer or wrong answer may be an example for you to choose or an answer for you to choose with that number in there. So make sure you do not add that. Part 6, buyer insurance premium. First year private mortgage insurance premium is $840. Homeowners insurance premium is $650. So now what we're going to do is add those two together, $840 plus $650. That gives us $1,490 total insurance premium. Next, part 6. Let's calculate the buyer's escrow reserves. The lender is requiring 2 months of reserves for homeowners insurance, private mortgage insurance, and property tax. So we got 3 things here to calculate. Homeowners insurance, $650 divided by 12. Remember, $650 is for all 12 months. They only want 2 months. So we're going to take $650 divided by 12, then multiply that by 2. That gives us $108.33. Mortgage insurance, same thing. We got $65 multiply that by 2. That gives us $135. Now property tax. We know what the year is for the property tax. It's $2,860. But we want to divide that by 12. Then also we want to multiply that by 2 to gives us 2 months reserves. Then that gives us $476.67. We're going to add those together and then round up. That gives us $715. Now let's talk about part 8. Calculate the real estate commission. The seller pays a brokerage commission of 7% on the sales price, not on the loan amount. Remember this. Don't mix up these numbers. On the sales price. So we got the sales price times the commission rate. That gives us the brokerage commission. So we take the $285,400 sales price, multiply that by 7%, then that gives us $19,978. Remember, commission is calculated on the sales price, not the loan amount. Let's calculate the excise tax. North Carolina excise tax is calculated for $1 for every 500, or a fractional part of 500 on the sales price. So sales price $285 and $285,400. Divide that by 500, then that gives us $570.80. We're going to round that up to 571 because of a fractional portion is present. That gives us $571. Don't round 570.8 down. The fractional portion requires us to round up to the next whole unit, to the next whole dollar. Now, part 10, prorate the property tax. The annual property taxes are estimated at $2,860 and will be paid later in the year by the buyer. So therefore, the seller owes the buyer for the seller's period of which they own the property. So the seller's day, 31 plus 28 plus 31 plus 18, that's the months, remember, January, February, March, and then 18 days of April. That gives us 108 days. So the daily tax, remember the 2,860, we're going to divide that by 365. That gives us a daily tax of $7.8356. So now that gives us the seller's share of $7.8356 times the 108 days that the seller owns that property of $846.25. Round up to, or just round to the whole number, nearest whole number, that's 846. So closing disclosure entry, understand that this would be a debit to the seller and a credit to the buyer. A debit to the seller because the seller owes it, and then it'll be a credit to the buyer. The buyer is going to pay the bill that partly belongs to the seller. Therefore, the seller owes the buyer for that time they have owned the property. The reason why the buyer is going to pay it in the whole is because the tax bill has not come out yet, because we're closing in April. Remember that. Part 11, assign the miscellaneous expenses. Settlement or closing fee, $480. Lender's title insurance, $468. Owner's title insurance, $78. Recording the deed, $20. Recording the buyer's mortgage, $47. Survey, $450. Wood destroying insects report, $230. You add all of those up, and that gives us $1,773. Those are buyer expenses. Understand that. Commit those things of who pays what and understand what the buyer pays. Now we're going to do what the seller pays, what the seller expense is. So with the seller expense, we've got deed preparation of $125, excise tax of $571, home warranty $480, mortgage payoff courier fee, that's $20. They got the brokerage commission of $19,978. You add all of those up, that gives us $21,174. The seller, they also have a mortgage payoff. They have a mortgage payoff of $212,300. The mortgage payoff appears separately as an amount due from the seller. So now part 12, calculating the buyer's total closing cost. So now we're going to add the buyer's expenses that remain unpaid and that will be due at closing. So the origination fee of $2,568.68. Discount points, $5,137.20. Settlement fee of $480. Lender's title insurance, $468. Seller title insurance, $78. Survey, $450. Pest inspection, $230. Deed recording, $20. Mortgage recording, $47. Interim interest of $434.55. First year PMI, $840. Homeowner's insurance, $650. And then escrow reserve, $715. We're going to add all of that up. Total buyer closing costs due at closing, $12,118.35. We're just going to round that to $1,218. Now remember, the $450 appraisal and the $35 credit report are not included in cash to close because they were paid before closing. Be sure to not add those into this cost. Now, part 13, we're going to calculate the buyer's cash to close. So the total that is due from the buyer, remember it's $285,400 plus $12,118.35. That gives us $297,518.35. So cash to close, the cash to close, remember paid or credit the $256,860 plus $3,800 plus $500 plus $846.25 gives us $262,006.25. So now we're going to take that, we're going to subtract that from $297,518.35. And so for the cash to close, that buyer is going to bring $35,512 to closing. So remember, the buyer's side is what the buyer owes, minus what the buyer has already paid or received as a credit, So part 14, calculating the seller's cash proceeds. So the $285,400 sales price we're going to minus the seller closing cost expense of $21,174. The mortgage payoff is $212,300. We'll minus that. We're going to minus the due diligence fee because they've already received it, and the buyer is going to get credit for that, the $500. Now, the property tax adjustments minus $846.25. That gives us $50,579.75. So the cash to the seller at closing, $50,580. Remember, the seller's already received that $500 due diligence fee before closing, so it reduces the money delivered to the seller at the settlement. Do not forget to minus that. Do not include that into the figures that the seller is going to get. So, final review. Loan origination fee, $2,569. 2 discount points, $5,137. Interim interest, $435. Escrow reserves, $715. Brokerage commission, $19,978. Excise tax, $571. Property tax proration, $846. Buyer closing cost at closing, $12,118. Buyer's cash to close, $35,512, and then cash to seller at closing, $50,580. Y'all, the key to solving a closing disclosure problem is organization. Don't stare at all of the numbers and panic, but instead break it down. Calculate the loan expense from the loan amount. Calculate the commission from the sales price. Prorate taxes using the required number of days. Separate amounts paid before closing from amounts paid at closing. Determine whether each adjustment benefits the buyer or the seller. Who is paying for it? Finally, calculate the buyer's cash to close and the seller's proceeds. Buyer's side equals what the buyer owes minus what the buyer has paid or received as a credit. Seller side equals what the seller receives and what the seller owes. Once you organize this information, the problem becomes much more manageable. Y'all, thank you for watching this bonus video for Post 302. Be sure to download the video worksheet using the link in the description below. I have also included a bonus word problem practice worksheet, so don't forget to download that practice worksheet and work through that on your own. To complete the word problem from this video is included in the video description, so you can pause the video, copy the facts, and practice the calculations step by step. So remember, the more closing problems you practice, the easier it becomes to identify who is charged, who receives the credit, and where each amount belongs on the form. Y'all, thank you again for watching, and like always, I am here to help you from licensing to close.